Docusign shares moving to the upside this morning as revenue came in above Wall Street estimates. I'm joined now by Docusign's CEO Allan Thygesen and our executive editor Brian Sozzi for more. Allan, it's great to have you on with us this morning. Really appreciate you taking the time. I do want to start, just to get it out of the way, I want to start on one of the points of contention with Wall Street from the earnings print, and that was specifically regarding the billings growth. It was a little bit pressured over the quarter here. I'm curious, what do you think was the biggest driver of that? And is that something that's bottomed out as of this quarter, or where do you see that heading?
Yeah, look, I think it was a very solid quarter for Docusign, and I think we've now fully stabilized our current business. All the metrics point to that, including dollar net retention rate, all the operating metrics. And so we did exceed guidance on all metrics, including billings. But as you point out, we'd certainly like to see billings growth pick up. And one of the things that's we are projecting a modest recovery in the second half. And then, of course, we launched this quarter our new intelligent agreement management platform, which really is the primary vehicle for our longer term growth aspirations. And the early results were really encouraging. So we launched it to the commercial segment in North America, Canada, and Australia. And so far, early order values are up significantly. Time to close is meaningfully shorter. Win rates are higher, and the business is picking up. August was twice the size of July. So it's still very early. We haven't rolled it to all the segments and to all the geographies, but the early indicators are very positive. And so there's a very buoyant mood inside the company as a result.
Allan, what is it about this new suite of offerings that you think is allowing you to have a lot of momentum behind the business from a top line perspective now?
I think one of Docusign's strengths is that we've had such a broad customer base. We have 1.6 million monthly paying customers of all sizes in all industries and across many geos, which gives us a tremendous base to sell into. And so the vast majority of the activity that we're seeing on intelligent agreement management is upsells to existing customers. And I think we've found something that can be instantly valuable for the broad majority of our existing customers. Everybody wants more insights into their agreements. So right now, agreements go into a deep, dark place once you've signed them. And we can instantly give you access to all the high-level data in those agreements, which is valuable for practically every function. The finance function wants to know, the sales function wants to know when their agreements are up for renewal, the purchasing department wants to know how the different vendors are doing, HR wants to know. And so it's just a very ubiquitous, deeply felt need that we're tapping into, and I think are the first to address at scale. And so looks good so far, but it's still super early, and I want to emphasize that. But we're really pleased with the early results, which are tracking to our expectations.
One thing that got high marks in this quarter is your operating margins, Allan. I believe they're a record high. Take us inside the company. I mean, where are you finding efficiencies, and how have you changed the structure of the company to get those improved margins at a time where some of your new initiatives on the top line are taking some time to gain momentum?
Yeah, well, that's been a very carefully managed balance. We knew we wanted to get more efficient, and I think we've done that over the last 2 years. Just one example, our sales and marketing was in the low 40s as a percentage of revenue, and this quarter it's 30. And so just getting a lot more efficient. It's everything about our sales process, improving our self-serve capabilities, tightening things on marketing, and all of that, while making sure that we are as efficient as possible, as productive as possible. I think we've been able to do that while stabilizing the business. We feel we're right-sized now for our current business and poised for growth. Obviously, if we see profitable investments going forward, we will look for those. But right now, I feel like the company is right-sized for its current business and for the opportunity ahead, and the teams are clicking on all cylinders.
Hey, really quickly here, I want to get your take on the macro. It was a big day for the Federal Reserve and the macro environment. We got this jobs print that indicated kind of where the Fed may be heading next, but I feel like you could have maybe a little bit predicted what we would get out of that print, because I know you work with clients across so many different sectors. Talk to me about where you are seeing growth and where you're seeing weakness in terms of the labor market. If Jay Powell was going to call you this afternoon, what would you clue him in on?
Yeah, I don't think it's going to call me, but we do. You're right. We do get a pretty broad swath of the economy. We certainly DocuSign's used for offer letters, for example, and so I suppose we get some indication there. A lot of account openings in financial services and so on. I think we're not seeing any major discontinuity. I think the economy has been heading in a decent direction. We're not projecting any further recovery. I just want to emphasize that our forecasts are based on the economy as we see it today. If there are interest rate changes, that certainly would help in, for example, our mortgage business and so on. But we're so balanced across many sectors that we're not super sensitive to that in the way that people might expect. So many people encounter us initially in real estate transactions. So I don't have a strong forecast for you, but it certainly does not feel to us like the U.S. or the major international markets that we're operating in are heading into deep recession.
Right. I know you had a lot of international growth over the quarter too, so that's something hopefully next quarter when you come back, we can talk a bit more about. Allan, thank you so much. Allan Thygesen joining us, CEO with DocuSign, and of course our very own Brian Sozzi for bringing us the conversation. Thanks so much.